Welcome back to Golden Rule Radio, your weekly recap of the precious metals market, the news that moves the markets. And there is a bit of news today that we're going to ignore and jump right into the chart.
A bit of news we're going to ignore?
I mean, every other news outlet on the planet is covering the news, so I figured maybe our listeners wanted a little respite.
There you go.
From the congressional discussions taking place
Well,
this
then
week.
Jump in. Let's look at those charts, Miles, because kudos to you. You've caught a lot of flack here in the last number of weeks for predicting the downturn and being somewhat cyclically bearish in the middle of a bull market, but I'd say, man, it really seems like you nailed it. As you always say, we're going to go there. It's just a matter of when you see these support levels. So throw those back up and encourage our investors.
Sure, and let's actually do them backwards today. So I actually want to start with platinum because in this down movement, platinum's leading the charge. We've had this upwards channel trajectory building up towards those old highs, or at least the previous top we put in back in February prior to the market drop with COVID in March. And we've been watching that channel build. Well, platinum broke below its channel. And the reason I want to point this out first is because in the long-term Fibonacci, where you put your starting point back at the March bottom up until the top we put in the beginning of August, we have broken through the 382 fib, which is leading compared to where both silver and gold are that we'll look at as well. So the more volatile metals tend to lead you percentage-wise up. They also tend to lead you percentage-wise down. And because of where platinum is sitting here, I still think we have a little bit more downwards movement to go with gold as well, which we'll see when we get to that chart.
What about palladium, Miles?
No, palladium's last. So we're not doing it in exact reverse order. I think silver's next. And the reason silver's next is we're just hitting that 382 fib that platinum already has. So with this drop in silver, the first little downturn that we had last week, that moved us into the short-term 50% line you can see on the chart here. Long-term, if you stretch those fibs back out again to early March, we're now coming into the long-term 382 fib. So we have officially had something that almost looks like a pullback in both platinum and now just starting to happen in silver.
Yeah, I agree. And that's a 7-week low in silver, which to me is a wonderful gift. Some have actually called for this pullback and would even label it from a Dow theorist standpoint a D-wave decline.
We called for it.
Yeah, that's right. No, and in a D-wave decline, these are short-lived to long-lived. They're very volatile, first of all. But in the last number of bear markets or cyclical bear trends in the metals, they've lasted anywhere from 4 to 8 months. So you could have a little bit of a pause, a little bit of a D-wave decline in gold, and that silver should follow suit. And if it does, you should see it come down towards 22. And that's exactly what we're seeing today. We're off more than 15% in a matter of 3 trading days. And to use Robert's term, back up the truck, add to your silver here. And it doesn't mean that it's necessarily guaranteed to hold. I mean, if we come down further from where we are now at this fib level, what would be your next target support level?
Well, my favorite target support levels all the way back at the 618 fib, which is actually, if you stretch the chart back, right when we had the breakout price. Again, I love when price action lines up with things like, say, Elliott wave theory, or in my case, fib levels or RSI divergence.
And I like fundamentals.
We know. You remind us every week. But when you see a number of different people using a number of different indicators coming up with the same sort of price levels, that I think just adds credence to what everybody's saying when a large number of people in the charting community are all in agreement with each other. So with that being said, I would say if we break below these points, the next place I would be looking from a price action standpoint is when we had a breakout to the upside back in the middle of July, which also lines up with the long-term 618 fib, which starts back in March. So you can see these 2 points on the chart, and that's actually sub $19. So that would be a pretty dramatic drop from here. But a 618 fib correction just in and of itself is arguably a pretty consistent pricing level to where that's no type of decline that would indicate any type of turn back to a bearish market. So we have a long way it could go down while still maintaining very strong bullish tendencies.
I agree. I mean, the silver bulls do need to stop bleeding in order to maintain the upward trend, right, that you would show.
We need the premiums to calm down.
Well, the premiums have. That's a really good point. I'm glad you brought it up because silver American Eagle premiums back in March and April, guys, were what, 40 to 45% over spot? Now they're down to 20 to 22%. So the premiums have come down 50%, and you should see those actually soften more in this decline. As supply in the U.S. Mint picks back up, you should see premiums decline. But the other thing that this has caused is an increase in the ratio. So because we follow the ratio so closely, we're now at 82 to 1 on the ratio. So if you've been waiting for your opportunity to add to silver, not only are you getting a spot price decline and cheaper ounces, you're getting a ratio bonus of about 10 points from where we were just a week or two ago.
Now, the reason I wanted to work towards gold, as we sort of saw between silver and platinum has already broken through those pricing levels. Silver is just hitting them today, and gold is probably one more step down away. So when you look at the gold chart in two different time frames, the short-term chart where you start just this last breakout move up starting in July, where we went from around 1,800 up to almost 2,100, and we're currently pushing down into the 618 fib on that level, which we've already tested once. So now you stretch this chart back out and you look at the longer term going back to the March bottoms, that 618 short-term fib is almost identical to the 382 long-term fib. So in that 382 long-term fib, platinum is already broken, silver is touching now, and gold is still a few dollars away. So I think the more volatile metal is leading the charge here, and I still think we're going to see more downwards movement in the metal over the next couple weeks.
Yeah, I like it. I mean, we've been talking about this for a few weeks, and here we are seeing that movement down in the metals price. I think obviously the dollar rising is putting pressure on the metals because the dollar's bumping up here like we've been talking about. So for those of you following us for the last few weeks, here we are. This is presenting the opportunity. As Miles says, may be coming a little lower. So as we see the metals market play out for the next couple of weeks, this is your opportunity to be buying for a long-term move on the bullish side with the metals.
Now, the reason I wanted to finish with palladium is because I think palladium is hinting more at what the equities market is doing versus what the metals are doing. Because you can see palladium in its chart is still scraping the top, actually, of its rising compression level. Now, what scares me about this is when you have this compression upwards into previous pricing, you can see here I've got the right shoulder of the previous high marked on the chart here, which we're just pressing into now, and the compression is getting tighter and tighter. What could potentially be happening is we're taking out a lot of standing buy orders at lower prices. And what I'm concerned with both palladium as well as the equities market, including the NASDAQ, which has just put in massive all-time highs, is we're taking out a lot of standing buy orders, and the market is getting set to take a pretty massive correction down. And that would coincide right with when gold, silver, and platinum have probably hit their bottoms and looking to turn back up. So I think we could see a very volatile market here leading into the election over the next 6-8 weeks.
So all of this goes obviously hand in hand with the dollar. So we'll keep that order of the show because we do tend to transition into the U.S. dollar. So Robert, I'm going to underhand soft toss this to you. The dollar is sort of the discussion item of the week, don't you think?
Yeah, the dollar seeing the bounce we've been talking about and probably has a little bit farther to go. I think that also corresponds with the equities market selling off and money moving into the dollar as a temporary safe haven. Don't let that confuse you because the dollar trend, I think, is still going to remain long-term down. We're just having a bump back up. Same type of thing with gold on the inverse. Gold's still in a bull market. Silver's in a bull market. So don't let this pullback confuse you. This is the reprieve in those longer-term trends that we're going to ultimately see play out. So the dollar probably has a little bit more to go on the upside, and the equities market selling off definitely helps boost the dollar.
Yeah, you know, the other thing that's interesting, that dollar collapse commenced in late March, right after Trump signed that massive COVID stimulus bill. And then you saw another leg appeared, downward leg in the second half of May. So the more stimulus there's been, the more weakness it's put on the dollar. Well, now you're starting to see things change. And some of that actually goes hand in hand with Trump's poll numbers as well. So as his poll numbers have started to increase sharply, you're seeing the opposite impact on the dollar. And 94 really is that breakout level that we're now are seeing that we're in, and that's going to cause that massive dollar short to really start to scramble. So the U.S. stock market should suffer as a result of that, and you should see the metals turn down when you see such currency action.
Sure, and I think the dollar's giving us a little efficient market hypothesis confirmation bias here too, because from a charting perspective, Robert, you've been calling for the dollar to hit a certain level, probably with bounces, turn around, reverse. And we're seeing that exact same thing play out over the last couple weeks. So from purely a charting perspective, it's been pretty apparent what we expected the dollar to do, and it's doing exactly that. But it's doing it in spite of the Fed announcement last week, stating they have no intention of ever raising interest rates for the foreseeable future, meaning multiple years, which means it can only do two things: stay the same, which is barely above zero, or push lower, and they're expecting to increase spending. So there's your efficient market hypothesis, right? We had an announcement that said the dollar should get weaker, and instead it's just following the charts, because I think the whole market knew that was going to be the case going forward. So the charts are, once again, as they always do, beating the news. So as I close the folder up on the charts this week, I do know, all jokes aside, there are some things worth mentioning in the news. If 2020 somehow continues to deliver, this has been a never-ending movie, and looks like we've got a whole new event this week, adding more fuel on the fire, so to say.
All right, Tori, fundamentals. What do you have
All right,
going
fundamentals.
over there?
Well, obviously alluding to your 2020, at least we're 3/4 of the way through it. So everybody hang in there. Keep in mind, too, at the end of every quarter, especially in a year like this, you're going to have massive rebalancing at the end of each quarter, and you're already seeing that occur. So a lot of money moving right now. You've got a lot of volatility with every little piece of news, some of it on corruption, some of it on politics, some of it on just profit taking. And from a metals standpoint, despite increased exploration, the actual production of the precious metals is down due to COVID, and we do look for that to reverse next year. America's Gold and Silver Corp actually plans to increase production 500% in 2021. So we've had supply constraints. That's driving premiums, to your point, Robert. It's also obviously driving price in general, but the interest level is huge. And then economically, yeah, there's a recovery happening, but it's not super healthy. The COVID virus is still weighing on things, and until or if or when you see a vaccine, we should expect some of this volatility. And then we mock about poll numbers and all that, but there's an election looming. And I don't know about you guys. I mean, I get more and more questions, either people on the sidelines or taking big steps and making moves in their portfolio strictly because of the election. Aren't you hearing that?
Absolutely. I mean, if 2020 was a fireworks show, we're about to see the grand finale. We've got the debates coming up Tuesday night, supposedly, if Biden doesn't back out. And yeah, so that I think will be the start of the grand finale of 2020. And so fireworks to be expected, volatility to be expected. We're going into October, which is always, historically going to be a little bit of a weird month. So in the markets, that is. So I'm excited about this. This is going to be fun.
Well, and I think it was Nostradamus that said on January 1st, 2021, everything goes back to normal, right? So we're just assuming that somehow the calendar is going to just solve all of our problems.
Well, may it be. That'd be nice. But Chairman Powell doesn't think that's the case. So he's actually out there calling from the rooftops for more stimulus. I don't know if you guys know, Powell testified in front of Congress, and there's good hints, good clues as to what the central bank is thinking there. And from a Federal Reserve standpoint, yeah, they said the same thing. The economy's improving, but recovery is highly uncertain. So we're going into an election with an uncertain economy, just like we've experienced here in the last 5 months, and that the risk of recessionary dynamics without more fiscal stimulus is real. That risk is real, maybe even a depression. And so there's not a whole lot more the Fed's willing to do. They're saying we need to reopen the economy in a sustainable way and control the virus. And neither of those things has happened. And neither of those things, to me, is really probably going to happen until post-election. So fundamental-wise, I'd say just keep your seatbelt on. They're looking for increased stimulus. If and when that happens, you'll get a drop in the dollar again. You'll get a boost in the precious metals prices. And the timing on that is as unpredictable here in this room as it is in Washington, D.C.
All right. Well, does that do it for this week's show, guys?
I think we're good.
Anything else? All right. Well,
we could go for another hour, but for the sake of the listener, let's wrap it.
Well, feel free to give us a call. It's 800-525-9556. You can follow us on Twitter at ICA Gold. Like us on Facebook, McElvany Financial. Everything on our website is at McElvany.com. Or click the button below to subscribe to our channel. Thanks for listening. Have a great week.